Welcome, everybody. I'm Rick Edelman. Thanks so much for joining us today on this webinar. I'm really excited about it. How to add crypto to client portfolios today. This is as topical a conversation as I think we're ever going to have. And to help us have it, I'm really excited that Christopher Jensen is with us today. Chris, thanks for joining us on this program. Chris is the VP and Director of Digital Assets Research at Franklin Templeton, one of the leading experts, and Franklin, one of the most engaged asset managers in this space. Chris, it's great to have you with us here on the webinar today. You've been in this business a really long time. You've been engaged for over 20 years in the technology field. And so talk a little bit about your jump down that rabbit hole. When were you introduced to Bitcoin, and talk about your journey?
Yeah, thank you. It's a real privilege to be here today. Yeah, as you mentioned, been investing in alternatives for quite a long time now. A lot of that spent in private credit. Did a lot of work in especially finance, really analyzing all different types of fincos, and those kind of old school, especially finance businesses, ended up becoming tech enabled. And so at Franklin Templeton, where I've been a little over 10 years. We started doing a lot of work in tech-enabled, financial businesses, and kind of investing and really exploring at that cutting edge of technology and finance. Eventually led us and the firm to digital assets and crypto. So it was one of the early members, kind of building out our platform, back in 2018 and 19. And I originally got involved. I was active in the Web3 gaming with my son. Playing Axie Infinity back in the day, and early applications of DeFi. So really kind of in the streets, as they say, since the beginning. And I think it's that curiosity and exploration which has helped me really kind of dig into what these protocols, what these blockchains, what these applications can do, and how they can kind of transform different parts of our business.
You just said, I think, the key phrase there, the exploration. If you're not curious, you probably shouldn't be in this business, because it's always new and changing and innovating, and we've got to stay curious and be willing to explore and have an open mind to what we encounter. So I think that's really important. And that's certainly been Jenny Johnson and her motive at Franklin Templeton, the CEO there. Everybody knows Franklin Templeton, one of the largest asset managers in the world, but give us a quick review anyway, particularly of Franklin Templeton's leadership in the crypto space, because I think it's a story most are not aware of.
Yeah, for sure. And originally it was really kind of wondering, hey, is this new technology, distributed ledger technology, blockchains, is it an opportunity or a threat for our business, for our industry? And so it was that kind of open question and inquiry to go explore, figure it out, which led us down this rabbit hole, right? And so I think from the beginning, we went in with an open mind. As mentioned, I have a background in credit, so always kind of a skeptical eye. But the more that we dug in, we realized there's kind of two things happening here. One is this really does appear to be a truly transformational technology that could transform how we think about the internet. And we're all kind of financial institutions. It really transforms how we think about the financial system, payments, moving assets around, trusting blockchains rather than a series of intermediaries. So I think from the get-go, we realized there's something to this technology. It's probably not going away. And how do we embrace it? How does the industry embrace it? And then the flip side of that is we also realized, hey, there's a real shot here at a new asset class, digital assets. And new asset classes don't pop up that often. So that, we're a large asset management firm. The sheer possibility that there would be a new asset class here, of thinking through what tokens are, like how do we relate that to other parts of, say, a company's capital structure? I think that was a really interesting exploration as well. And when we fast forward to today, I think both of those, initial kind of gut feelings proved correct. This technology is here to stay. It's transforming businesses left and right. And this asset class is now a $4.3 trillion asset class and growing. And so it's something that really needs to be paid attention to.
Yeah, it's interesting. You mentioned the new asset classes. The last time we had the introduction of a new asset class was oil in the 1850s. So it doesn't come along often. And look at the
Right.
incredible transformation that oil has had, not just economically, but you could argue environmentally and socially as well on our planet. Crypto looks like is going to have the same kind of impact. And you missed oil in the 1800s. Where you don't have the you don't have to miss crypto. So I'm glad you're all here today. A lot of you sent in questions when you registered for this event. I'm going to pepper Chris with all of your questions. You can also post additional questions as we go along. Just go to the Q&A box. I'll be curating that as we go. And when I see something that's germane to our conversation, I'll post that to Chris as well. So I invite you to do that. One quick caveat. If you have an AI meeting recorder or note taker, please turn that off because that creates compliance issues for Chris and Franklin Templeton. So we can do a live event, but we can't record it with an AI note taker. So please turn those off. And thanks for understanding. Um, so let me just jump into this, right at the start, Chris. As we have this conversation today, Bitcoin is again approaching its all-time high. It's been bouncing around its all-time high for the past several days. Talk about the status of what's going on in the crypto marketplace today. What are you paying attention to?
Yeah, and you point out Bitcoin. I mean, that certainly is one of the bellwether here. So yeah, recently got over 126,000 just last week, right? And kind of continued it through the weekend. So all-time high. One of the interesting things is that Bitcoin dominance, or really Bitcoin's share of the total global crypto market cap, had peaked out at around 66% and then had kind of broken down and was on a steady downward trend. It does seem to, have stabilized and even kind of ticked up a little bit. But I think what we're seeing is, that points to it being a little bit later in the cycle. And what we've seen is certain altcoins, something even like Ethereum, really has, kind of rallied in the back half of this year. That really seems to be attributed to flows, in addition to people looking for ways to gain stablecoin exposure. And when we look at flows, really we're talking about the Ethereum spot ETF, strong flows there, just like we're seeing on the Bitcoin side. But that's really kind of ticked up. The emergence of these corporations or digital asset treasury companies, buying up these digital assets to put on their balance sheet. That's been another, strong structural buyer of these underlying digital assets. And I think, we're starting to see kind of, regulatory clarity, tailwinds, institutional adoption. So this is really kind of given way towards what we think is a pretty healthy and constructive market. It doesn't look to be, frothy, at this point in where we are, and so that looks encouraging. We are keeping an eye at kind of certain metrics there, but in general, I'd say fundamentals are strong. Stablecoin balances continue to grow across the board. We also have an early stage blockchain venture team, so the innovation pipeline looks strong as well. And as we enter an environment or a backdrop where rates are coming down, the U.S. dollar, is weakening. Global liquidity seems to be up. It just looks like a favorable macro backdrop for this asset class as well.
And so it's interesting that you cite all those tailwinds. It wasn't terribly long ago where it was the exact opposite, but things are clearly going crypto's way. And an undertone to all of that that you didn't mention is the legislative and regulatory environment coming out of the White House and Congress. Talk about the sentiment in Washington, D.C., the recent legislation on the Genius Act, the upcoming Clarity Act. Talk about all of that, what it means for crypto going forward.
Yeah, I mean, definitely. First and foremost, a complete change in the tone, from the current administration. As we know, the kind of prior administration was much more, regulation by enforcement, and really lacked clarity. And it's just really hard for these founders to build, with that kind of uncertainty. It's hard for big institutions, like ourselves even to really kind of go all in on this space without some of that kind of clarity. And we're just starting to kind of see that. Certainly, there's a change in tone. which is felt across the board. But we need to see more than just tone or better vibes, right? And that initially manifested itself in the passing of the Genius Act, which provides a federal framework for thinking about and governing stablecoins. Really one of the lifebloods of the crypto industry. But what Genius Act doesn't do is actually provide a framework for the blockchains that these stablecoins are running on, right? So Genius Act, a monumental step in the right direction. You referred to or allude to, the Clarity Act or the Market Structure Bill. We think that is forthcoming, and we could see actually, real progress on that in the fourth quarter. I mean, barring any, kind of sustained government shutdown. But it does seem like, that's the next act to kind of come into place. And the more clarity we get, the more, both startups and founders and teams, as well as large institutions, can really kind of step into and embrace this technology in this asset class and kind of do so here in the US.
And let me preempt a concern that some folks have raised about what's happening in crypto, and particularly in Washington, D.C., fearful that, look, it was obvious that the Biden administration was totally opposed to crypto. Um, we now have the Trump administration, which is totally supportive of crypto. But there's fear that when Trump's out of office in 28, his successor, who may be a Democrat, might try to return to the Biden era policies, unwinding all of the advances in support that the Trump administration and the current Congress is providing. That really isn't possible, is it? Because now, once you have the laws in place, it's incredibly difficult, if not impossible, to unwind them. And the best example I offer for that is Obamacare. I mean, Trump, when he came into office in 2016, said he hated Obamacare and wanted to get rid of it. He failed. He's been saying it again here in his election since 24, and he hasn't gotten rid of Obamacare either, because once there's a law in place, laws are really, really hard to unwind. So my attitude is, by the time Trump leaves office in 28, crypto will be so ingrained in the economy that any succeeding president is going to be stuck with it, whether they like it or not.
Yeah, 100%. And just to double click on that, right? Like, with the Genius Act, the passing of the Genius Act, and that federal framework for stable coins, what we now have is the ability for money, digital dollars, to flow outside of, the system, kind of, so to speak. They're 100% backed by treasuries, but a stable coin can move pretty frictionlessly, peer to peer. I use the example right now. You can send a stable coin, which is a digital dollar, anywhere in the world for under a second, for under a penny. That really is kind of a 0 to 1 moment. And the governance, the allowance of that type of technological breakthrough, and just, financial system, monetary breakthrough, is now kind of codified into law. So it is pretty profound. And obviously, there's more to come, but that's a great starting point.
And I think there was a pretty obvious play by Congress to pass the Genius Act first, as opposed to any other
Yeah.
crypto bill, because everyone's in agreement that stable coins are really nothing but good. There isn't debate because there's no price volatility. There's no inherent profit making the way that there seems to be, with meme coins and other digital assets. Stable coins are simply, like you said, a digital version of cash. And what's not to love about that? Because it's faster, cheaper, safer, and easier to move the money around from person to person, or entity to entity. So it was easy for Congress to rally behind it, saying, yeah, let's provide rules of the road so that everybody can have a greater level of confidence in these stable coins that they're using. And that's paving the way for more advanced legislation, the Clarity Act. How optimistic are you that we're going to see Clarity signed into law, and when do you expect that to happen?
So prior to this current shutdown, I think we were really seeing fourth quarter as, I think we're going to see more on the ETF front, right? Really, that opening up of that funnel, new crypto ETFs coming to market, and was hoping to see kind of real material progress, if not an actual passing of the Clarity Act. Obviously there's a little bit of a curveball now, but I think the point still remains, like, these things are teed up, they're very much coming. And so that gives us and the market, I think, confidence that these are real priorities, and they're not in the distant future. They should be coming quite shortly.
So, given that, you made the comment earlier that even at Franklin Templeton, you were kind of struggling with how to engage in the absence of clarity, in the absence of the rules of the road, which are now becoming more and more put into place. Not just the Clarity Act that's coming, but the SEC and the CFTC have been clear that they're going to issue their rules over the next 6 months. So, as this allows the traditional Wall Street machine, of which Franklin Templeton is one of the biggest players, to engage in the crypto space, are we beginning to see a converging of crypto and TradFi?
Definitely. And I just got back from, Singapore and Thailand, Token 2049, one of the largest crypto conferences in the world out there with institutions from all over the globe. And what we're seeing and hearing in those conversations, and then, even here back at home with respect to our counterparts across the industry, it's much more than just talking and brainstorming ideas at this point. It is really, okay, this is here to stay. How do we incorporate this? How do we act rather than like let's brainstorm ideas about it? It's really how do we act and move forward together. And so and then on the blockchain venture side, this convergence of TradFi and DeFi, so to speak, is a real theme that excites them, and they're making investments in this space. So we see it both in terms of startups, helping enable this convergence, as well as the large institutions really kind of stepping forward to embrace this. So we're seeing it at both sides, and it really does feel different than it has in years past. I've been making this exact same trip, every single year, and this year the takeaway was really, oh wow, this is happening, and it's happening, now.
So translate that into what that means, uh, level of engagement. Are we
Yep.
talking about more investors, more firms, more products, more AUM? I mean, talk about what all that translates into.
Yeah, all the above. And so to give an example, it's you just heard the recent announcement from NASDAQ, of first, trying to get approval from the SEC to think about and ultimately move, its trading onto blockchain rails. First go to 24/5, then 24/7, 365, with that being the goal. And when you can have instant settlement, that is a strong, kind of value proposition. Um, you know, to actually bring that into place, a lot of things need to happen. And so that's what we're really seeing is, okay, if that's the end goal, what do all the different kind of stakeholders in this equation need to do? Like, how do their systems need to be upgraded? And how can we leverage all these great tools that are fundamental and crypto native in this transformation of kind of moving on to these new sets of rails. Um,
So I heard Elon Musk say the other day that he
yeah,
believes that in the not too distant future, all data centers will be operating in space. His point was that our weather satellites already do, and they rely on solar power, which is how those satellites stay in orbit and keep getting energy. And we'll do the same thing with data centers. As the technology gets smaller in size, gets easier to launch into space. And he says in the future, we're not going to have any land-based data centers.
yeah,
And I was like, wow, that's kind of freaky. And that's got a big implication for the people that are building those data centers and all the real estate transactions associated with it and blah, blah, blah. And wow, that's a really big implication. And I'm thinking of that with what you just said about NASDAQ saying we want to make stocks available 24/7, 365. My head kind of explodes because right now it's Monday through Friday, 9:30 to 4 p.m. And it allows everybody to go home and play golf on the weekends. How is a financial advisor going to have to operate in an environment where a client is able to trade and may demand to trade at any time of the day or night, any time of the week of the year?
yeah. So, look, I think we're going to have new types of investment products and tools to help with this. I think we also see not just the convergence onto blockchain rails, but the convergence of AI into our industry, right? The wealth and asset management industry, which will help. And it's going to become more global as we think about, firms. in that trading, I think it will happen. There'll be, shift type work, around the clock and using different time zones to have coverage, for those types of players and shops. But for, individuals, working with their advisors, I think we'll see better tooling that will help with kind of where this is all going.
I think it just demonstrates that we're about to see a rate of change that
Yeah.
may be unprecedented in our personal careers.
Yeah.
I remember back in the 80s when I first started in this business, whatever the stock market was doing by the time you went to lunch was how it was going to be doing the rest of the day.
Right.
There wasn't much trading volume, there wasn't a whole lot of things going on, and things didn't move all that fast. The crash of 87 kind of changed that world. And then, of course, the technological innovations over the last 40 years have radicalized it. And I think we ain't seen nothing yet. And so I think we need to be prepared for what may be coming, and recognize that if we aren't staying up to speed on the technological innovations, we may be caught flat-footed. And that's not going to help us in our practice. It's not going to help us serve our clients. It might not even help us keep our clients, as they seek better help from people that are being more advantageous. So just food for thought that is just kind of blown me away. And related to that, to what, right now, as it stands today, Wall Street's banks are generally not involved in crypto. I mean, there's some pockets of activity here and there. J.P. Morgan's got Kinesis, which does 2 billion a day in cross-border payment transmittals, but most retail investors or retail savers in the banks and brokerage firms are really not engaging. They're not yet doing crypto products to a significant degree. There isn't a lot of tokenization in the marketplace yet. You folks
Mhm.
are among the leaders of that, but it's still in extremely early stages. How long do you think it's going to be before the Wall Street machine, as we generally know it, really is fully engaged? And what do you think the impact of that is going to be on asset flows and therefore crypto prices?
Yeah, I think we'll see a lot of progress over the next, call it 12 to 24 months. I think given we're talking about institutions, they tend to move a little bit slower. But that being said, if we believe something like Clarity Act is coming, imminently, that really again provides the clarity that's needed for thinking about other types of assets, digital assets, other than stable coins. So if we start to think about tokenizing stocks or bonds, or different parts of our processes on these various blockchains, whether they're open public permissionless chains or some of the more private chains out there, we really do need that kind of clarity on how this all works. And when we think about staking, what's the tax treatment of that? Is that a security, or like there's just a little bit more clarity needed. But that being said, since we know it's coming, the institutions are already working at figuring this out. So I think we'll see more over the next, kind of 12 to 24 months. And when we think about something like tokenization, just as an example, right? The earliest examples of that were tokenizing shares in a fund, that then that fund invests in various asset classes. But to actually tokenize the assets themselves and have those move freely on chain, we're starting to see that done. It's actually kind of an intellectually challenging puzzle to figure out how to like tokenize something like a bond, and so but people are working on it, and I think we're going to see great kind of strides. So I kind of put it in the 12 to 24 months.
So let's assume, I'm going to take you into a time machine 24 months from now. They're all engaged. The rules are in place. The laws are there. Everybody has signed off on it. Everybody is fully engaging. The products are in the marketplace. The advisors are recommending them to clients. Translate that into Bitcoin's price.
Um, so I will say, right, so Bitcoin, I really look at it as, kind of a digital gold, as opposed to all these other digital assets, which are really the technology plays on this everything that we're talking about. The technology, this asset class, new ways, these new rails, that's in the everything else kind of. But I think Bitcoin, we talked about market dominance and it leading. So I think, if we're at, 125 now, 2 years, I mean, yeah, we could be up, 300, 400. I mean, it could be pretty significant.
And that is a much higher rate of growth than I think we described to the stock market or the bond market or the real estate market. And that's why there's so much enthusiasm behind this. And so it raises this question, which is a very common one that we receive from the folks who are attending and watching us here today. given that we're at 125 now, which is an all-time high, yet so many folks, you, me, others, are projecting doubling, tripling, quadrupling the price of Bitcoin over the next 4 or 5 years, what allocation should an advisor place into crypto today for a client?
Yeah, so the way we've been thinking about that, and in particular, say our solutions group, which looks across, kind of a multi-asset, multi-sector view across all our various businesses and how they think about portfolio allocation. And one of the frameworks that they've developed is to really think about it in terms of how much of, say, your active risk budget for your portfolio are you going to allocate to digital assets. And say if you're, allocating up to 20% of your risk budget to something, an asset class that's still, quite volatile, it works out to, they have it working out to kind of mid-single digit percentage, and obviously this depends on the ultimate investor, their time horizon, risk preferences, and so on and so forth. But I know that you've been, quite innovative and forward thinking in terms of kind of thinking beyond that, because as we look at it, and everybody runs the back test, and the big takeaways that we find, as you know, is when you introduce digital asset exposure to the portfolio, the expected returns go up, the volatility goes up as well, but because of it being less correlated to traditional assets, you actually get an improved Sharpe ratio from the inclusion of those digital assets. And the more you add, it tends to, benefit the portfolio even more, right? So it would suggest dialing that up. Now, obviously, if you take it to the extreme, is 100%, or with leverage the amount, probably not, right? But at some point there is that sweet spot. I think it does depend on the end investor. But that's how we think about it. How much of your risk budget? Because this also then frames what should you fund that allocation with, and we do think it should come out of the riskier buckets in your portfolio. If it's just stocks and bonds, out of your equities. If you have alternatives, venture capital, emerging market, type exposure, basically your higher risk budget is what we think about how to fund it.
So you folks at Franklin Templeton, I've heard, rather than 60/40, I've heard 60/20/20. Elaborate on that.
Yeah, I think and I think this is an increasingly discussed topic. The roles of, I mean, I come from kind of, credit and fixed income background, but what really does kind of fixed income do for us in the portfolio going forward? Historically it was this quite large allocation. Um, you know, Perhaps if that comes down and you are including, something like gold or Bitcoin again as that kind of hedge against global macro uncertainty. It's often referred to as the debasement trade idea. Having gold and Bitcoin in the portfolio to protect you against the declining purchasing power of the dollar and whatnot. And again, I think that can provide an interesting addition, to your portfolio. 20%, I don't know if that's all supposed to be Bitcoin or other digital assets, but for certain people that certainly seems appropriate. For others, not so much.
And this related question to all of that, if someone is talking about allocating to crypto, how do you do that? Is it just Bitcoin, or is it Bitcoin plus the other commercialized side of the ledger that you described, the Ethereums of the world, as
Yeah.
opposed to the store of value? How do you figure that out? And talk about the SMA products that Franklin Templeton offers to help advisors implement all that.
Yeah, definitely. There's a lot to unpack there, a lot of good kind of questions, and they're certainly related, right? So, and as we've talked about kind of back tests and whatnot, and as we know, the most important thing you can do is to move off zero, as they say, right? The jump from the benefits to your portfolio going from 0% to 1%, that is the biggest jump, right? So once you decide, okay, I want to allocate to this new asset class, this new type of technology, then the question is how. We talked a little bit about how to fund it, but mechanically, how do you do it? And what do you invest in? To your point, are you just doing Bitcoin or something else? And the benefits of Bitcoin are, it is still the 800-pound gorilla, around 60% market share. If we look at the correlation between Bitcoin and other digital assets, it's still quite high. So even though I think of Bitcoin more as just digital gold, rather than these other digital assets, which I think of as technology assets, because the correlation between all these digital assets is still quite high, you get the bang for the buck, so to speak, of that call option on the technology, even though Bitcoin really is playing that role of digital gold in the portfolio. Some people think of it as you get digital gold plus the benefits of the adoption curve. And so that is certainly the easiest way to get started, just doing Bitcoin. But I think as this industry evolves and matures, becomes more institutionalized, there's going to be better ways to get exposure to the technology. And that's where you mentioned Ethereum, Solana. So those are blockchains, and then you have businesses building on these blockchains. And so really there are, kind of better bets that can be made. The problem there though is technology moves fast. And it really is a full-time job to stay up to speed, up to date. And there's now, there's 50 million of these tokens, and most of them are not investable. But finding the right ones, both that are developing something truly innovative and have staying power, and then you got to get the second bet right. That whatever they're building that's creating value, there's got to be a way for that value to get back to the token, to make the token go up for fundamental reasons rather than just narrative or hype, right? And so it's just a lot of more work on that side. But I think there are real gems there. And this is an opportunity, we believe, to say invest in the early innings of the internet, and to benefit from those true compounders. And so that would be why you would want to do more than just Bitcoin, but it does introduce complexity, and kind of risk. And so that's also why a lot of people feel like the need for active management for your everything other than Bitcoin does make sense. And there, yeah, we've introduced the idea of crypto SMAs. I think we're also seeing innovation in the ETF market. Initially, you could just have a single asset crypto ETF like Bitcoin or Ethereum. We have a product out there that, as each new asset gets approved, it just folds right in. So it gives you kind of low cost beta, monthly rebalancing. So that's a nice product. And so I think there's different ways now for people to access that low cost beta, or they could have, more alpha generating strategies, whether that's in, long only picking the best tokens. We're seeing market neutral strategies, obviously blockchain ventures, another approach, but those are all on, kind of the active management side of things.
If you're interested in the SMA route, Franklin Templeton works with Eaglebrook Advisors, which is the oldest and largest crypto SMA provider, and you can check them out at Eaglebrook Advisors. We'll toss their link into the chat so that you can easily access them. And yeah, that's really the key point, isn't it, that you've raised, that Franklin Templeton offers a variety of ETFs with a bunch of different strategies, like you said, a basket of holdings versus single asset, and so on. And so the message that I would convey to advisors is really this: when folks are new to crypto, they get very confused very quickly because of all the variety of investment strategies, investment options that are available, and they're really not sure how best to proceed. And they get themselves confused almost to the point of paralysis. And here's the solution to all that: you should treat crypto the same way you treat the other assets in your portfolio. You know how you would handle the question from a client about stocks. If they were to say to you, "I'm new to stocks, which stock should I buy?" You know how you'd answer the question. You would tell them to invest in a broad portfolio of stocks that gets rebalanced regularly. Well, guess what? That kind of ETF exists at Franklin Templeton. So there's no reason for you to change your practice to accommodate crypto. Crypto is available to fit into your practice the way you run your practice presently. It's remarkably simple and easy, and very low cost, and tax efficient too. So I think you can just make it a whole lot simpler than a lot of folks really realize. Let's jump into some of the other questions that folks have been asking here. First, you want to talk about staking at all?
Sure. So staking is a way to have your kind of long, investment idea in crypto also pay yield. So staking refers to kind of putting up capital. That capital actually helps secure the network. Bitcoin is what we call a proof of work consensus mechanism. Blockchain, that's when you have all the miners around the world doing all that, really resource intensive computational work to secure the network. basically Bitcoin is still the only one that does that in size. Every other blockchain, Ethereum kind of merged over, uses what's called a proof of stake network. And that's where you put up capital. That capital is helping to secure the network. And for compensating you for locking up that capital, you're paid in the native coin, and that creates a native yield on your investment. So we mentioned kind of innovations in the crypto ETF market. We're pretty optimistic that staking will be allowed, in ETFs. So this will allow you to have your directional long only exposure in something like an Ethereum or a Solana, and also earn incremental yield on that investment. That yield is coming from staking. And again, that is, you're also doing kind of a good service to the network because it's that capital that's helping secure the network. And so you're getting compensated for
What
putting up
what
that.
kind of what kind of compensation are we talking about?
It depends on the network. It could range anywhere from, a very low single digits percent to, very high single digit percent. So, Ethereum would be more in the, call it 2 to 4%. Solana is going to be, 7, 8%, especially if you're, 7, 8%, much higher.
So it's in today's low interest rate environment, that's something people ought to be paying attention to and learning more about. This is a really interesting question. I know you talk to advisors all the time, Chris. How do you help? Here's an advisor question. How do you help a client who is interested in crypto, but his firm won't allow it? What do you say to those advisors who want to get engaged, but they can't?
Yeah. It's a pretty common situation. Usually there's someone who's pro crypto, they probably own it personally, they're all in, but they have to convince, their manager, their compliance department, legal, and what we've really the most effective tool we found is education. And the more you understand it, I think the more you can wrap your head around it. So and there is a long, kind of learning curve here. I like how you kind of simplified things, Rick. And I think that is the way. I think when we zoom out and look at where crypto is today, we mentioned, kind of 4.3 trillion asset class. And, if we want to use ballpark numbers, equities at 60 trillion and fixed income at, 40 trillion. So, I mean, the market portfolio right now is already at like 4%, right? So if you're still at zero, you are now kind of making what looks like an active decision to underweight this asset class. And so that also needs explaining, right? So I think, education is the most important thing. Start with Bitcoin, wrap your head around that, and you can kind of go from there. And I think the internet example is a really good one. Right now we have the ability to send an email, right, anywhere in the world in under a second, permissionlessly. And this, with the advent of crypto blockchains, we can actually have value that's scarce, and we can send now money, just as easily as we would an email. It really is kind of providing that evolution of the internet to incorporate money, financial assets, things of value.
You mentioned earlier, one of the questions we got today, you mentioned earlier the basket ETF
Yeah.
that you have. Can you provide the ticker for that and some details?
Yeah, the ticker is easy peasy, and the whole idea, right, is it's trying to make it easy to invest in crypto. Right now, as I mentioned, it's just Bitcoin and Ethereum because those are the only two assets approved here in the U.S. for spot market. As we also mentioned, we are quite optimistic that more are coming, and so the idea is this is already set up such that others can, once they're approved, flow in. This is 19 basis points, one of the cheapest ways out there to get your kind of, beta exposure to this new asset class.
Let's see. We've talked about the SMA at Eaglebrook. Can you talk about the minimum amount required to invest in that SMA?
I believe it's $5,000. I think it's quite small.
Yeah,
Um,
it's not a significant amount at all. And also, Avtar is asking if it can be done in a Roth IRA, and the answer is yes. Any IRA
Yeah, and I
account.
will say, I mean that, we talk about how to get exposure. I mean, I personally love that there's now different ways to get your exposure. And when it is in kind of ETF format or whatever, I mean, to be able to put that into a tax advantage account, I think that is wonderful. And I hope to someday see it, available in, 529s and others.
Well, funny you mentioned that because this was a question that Isabel asked about not 529s, but 401ks. There's
Yeah.
been a lot of talk, because Trump has been very clear that he has rewound Biden's prohibition and is demanding that 401k plans be allowed to add alternatives, private equity, private credit, and as part of that, crypto. You got an update on that? Any movements going on there of seeing crypto actually being deployed into 401k plans?
I haven't seen much beyond the headline. I'd be curious, Rick, have you heard other things, as well? I mean, I'm certainly encouraged by that news. And it's just another example of kind of moving in the right direction, but I haven't seen concrete progress beyond that.
The issue that we're seeing,
Mhm.
I've been spending some time with some of the outfits in DC that are lobbying and dealing with all this, and there are three major players associated with all of this. The first
Mhm.
are the plan sponsors.
Mhm.
Second are the plan consultants, and third are the ETF providers themselves. The ETF providers is kind of a no-brainer, led by
Right.
Fidelity, which is the largest 401k provider in the
Yeah.
country, and they've of course got ETFs out there too. And they said years ago that they were going to allow their Bitcoin custody for use in 401ks, and the Department of Labor under Biden immediately shut that down. So the ETF provider is not a problem. You'd be thrilled to
Yeah.
make your ETFs available to K
Right.
plans. The problem are the plan sponsors, meaning the employers, because they have a fiduciary obligation and they are fearful of getting sued if they do something in the plan that the plan participants, the employees, don't like. So they're working very slowly and carefully to make sure they're not at risk from regulatory wrath, which Trump has assured will not happen, and the Secretary of Labor has made that very clear that that's not going to happen. The Employee Benefit Security Administration, EBSA, has made it clear there's not going to be a regulatory burden or problem. But the issue now, the big stumbling block, are the consultants.
Mm.
The consultants which provide a lot of these services to these K plans are generally not engaging in crypto. They are old school. They are, 10 years out of date in the world of crypto. We see the same problem in the pension world, where most pension consultants are not actively recommending that their clients include crypto. And since these clients, meaning the pension funds or the 401k plans, are relying on their consultants for advice, if the consultant isn't all behind it, then it's not really going ahead as fast as we'd like. So it's going slower, I think, to your point, than we would like to see, but it's going to be inevitable. And we think along the timeline you mentioned, 12 to 24 months, it's going to be there. And once the doors open, it'll be
Yeah.
everywhere for everyone, and it'll be a very significant source of asset flows because for most Americans, the 401k is their biggest asset,
Mhm.
biggest financial asset outside their home. And as they go to allocate 1% or 10% to of the portfolio to crypto, it's going to represent massive inflows on a regular basis. So um, we're not there yet, but it's coming pretty quick,
Yeah.
slower than we'd like.
Right. Right.
Um, Brandon's asking about tokenization. How is that going to impact, he asks, the ETF and mutual fund business?
So, um, if we think that where this is all headed is that all assets will eventually run on blockchain rails. Your crypto native assets, your Bitcoin, Ethereum, Solana. Your traditional assets will be tokenized, and on blockchains, and we'll have non-financial assets too. Sandy Call, my colleague, talks a lot about cultural assets and other things, and these will all be found and represented in your digital wallet, right? You won't have disparate account views. We'll just have a digital wallet, and all of our assets will be there, and they'll move on blockchain. So, how do we get from the current world we're in into to that world? I think there's this really interesting kind of design space where you're seeing again the kind of the theme of convergence of these two worlds come together and these hybrid products. And when you think about it, ETFs are almost reverse tokenization, and And the same way, like tokenization is kind of the inverse of an ETF. So in tokenization, what we're really talking about is taking a real world asset or basically a traditional asset. So for us, it was a money market fund, and by tokenizing the share class, we can actually move that exposure and have it natively exist on the blockchain. And when we talk about Nasdaq interested in tokenization and these other firms, what we're talking about is bringing traditional assets, on the blockchain, right? And whereas ETFs is almost the exact opposite of that. And that we're taking the crypto native asset, Bitcoin, Ethereum, Solana, we're wrapping it in an ETF wrapper so that you and I can put it in a tax advantage account or let it flow and be represented in our traditional portfolio. So these are two great examples of this hybrid space in between, kind of where we are and where we're moving. And so I think it's still early days in tokenization. You recently saw, Figure go public, and with all the tokenized HELOCs they're doing, home equity line of credit. I'm starting to look at much more interesting tokenized private credit use cases. Given I'm kind of from that industry, the first vintage of those business models, I just didn't find that interesting. But they're getting better, and I think we're just going to see more and more actually move on chain. And I mentioned it's easier to take the fund and put it on chain. It's harder to take the individual assets and put it on chain, but we're seeing examples of that be done. And even like senior secured lending, you can have the ownership in the asset, and the asset exists off of a blockchain. That deed or that title can be represented by, say, an NFT, a non-fungible token, and be on the blockchain and governed by a smart contract, such that if there's a default, and I now get to exercise my rights and remedies and claim the collateral, seize the assets, I can actually do that, and the NFT, the title, will actually transfer to me, and that'll actually all happen on the blockchain, and it happens much more efficiently, much cheaper than it can and does in the off-chain world. So, just examples of, we're early days, the technology is catching up. There's actual demand from institutional players to get this right, figure it out. And so I think we're going to see a lot more on the come, and it's pretty exciting, because when you think about it, something like a leveraged loan, an asset class that you used to spend a lot of time in, that single asset could take almost up to a month to settle. All that goes away, when we're talking about blockchains and the idea of like instant settlement.
Corey asks, is it possible that the president could make an executive order to seize all the Bitcoin? And as outlandish as that may sound, he's referring back to when Nixon essentially did that with gold, or actually prior to that, when FDR seized all the gold and forced everybody to give it all up, and then Nixon left the gold standard. So could such a thing happen with Bitcoin?
So the one of the fundamental ideas, behind crypto, blockchains, digital assets is that you don't have to, but you can, self-custody your keys, and therefore kind of the rights to your assets. And so, when you're investing through an ETF, you don't actually, kind of own the keys, but that's always available to you. And that's where most of the Bitcoin, most of the digital assets are held, is kind of outside the system, so to speak. I mean, again, the value proposition of Bitcoin is it is this store of value that exists outside the state, and that's why the analogy to gold is a decent one. And so if any one party or firm or actor tries to seize it all, they really can't, because a lot of it kind of exists outside the system. Everybody who owns some in a self-custody manner and has, they alone have their keys and the right to those assets, that ends up being kind of like a self-sovereign right, and that's very much part of the ethos. So I don't think that'll ever go away.
And I don't think it would happen without warning. I think you'd hear rumblings of this well in advance. Certainly was the case with gold in the 30s. And there's certainly no indication or expectation that the Trump administration would do this. So I think anything like this is at least 3+ years away. So it's not something I would be worrying about today. We've recently heard about the new S&P Digital Markets 50 index, which combines crypto with a bunch of stocks in the crypto industry. Do you have any thoughts on that index or application in the marketplace?
So I think that gets into a really interesting trend of what we're seeing in the industry. Originally, there were very few ways to get digital asset or crypto exposure in the equity market, right? You could invest in Coinbase. There were the Bitcoin miners, the public Bitcoin miners, but there just really wasn't a lot of opportunity to express an idea in crypto or digital assets or get exposure using the equity markets. I think that has changed with a few things. One, we talked about the ETFs. Two, we kind of touched on it, but this whole idea of digital asset treasury companies, actual corporations whose primary objective is to acquire digital assets, put it on the balance sheet, use their publicly traded stock to provide access. And the value or the objective there is that this team can grow the crypto per share, compound it faster than you otherwise would, say, if you just own spot or just own the ETF. That's the claim. And they point to, Michael Saylor did this with strategy. There's a nice track record there, but there's a lot more competition now. But that's another avenue, and people I get asked all the time, should I buy the ETF or should I buy one of these digital asset treasury companies? You mentioned oil. Like I used to use a bunch of oil gas back in the day, and when I wanted exposure, to something, it's always better to get like pure play, in my mind, pure play exposure to whatever it is that you're interested in, right? So I think of ETFs and that spot market exposure as being more pure play, as being cleaner. But obviously, people can have different, views on this. And certainly, the best teams out there, I think they do have a good shot at doing what they say they're going to do and compound the crypto per share over time. But not all teams are going to do that, right? And there's going to be winners and losers there. But that is room to kind of make bets and be right or wrong. And then you're also seeing the IPO window really open up for crypto It seems like almost every week we're getting another public crypto company. So the idea about this index opening up to including different ways to get your digital asset or crypto exposure, I think that really touches on this broader trend of now you can actually, there's different ways to get your exposure through the equities market. Maybe I'm biased, but I tend to, if you want Bitcoin exposure, I think, Bitcoin or the Bitcoin ETF is the cleanest, purest way to get that. But there's just different ways to express those ideas now.
And I think that's really the key. We believe, I think that most advisors would agree, in diversification
Yeah.
rather than trying to pick the specific winner. Let's just own the basket, call it a day. Let's get directionally correct and we'll be fine. And so your notion makes a lot of sense, is that there's no reason to try to gamble with a risky asset when you can reduce that risk through diversification and a long-term hold.
Yeah.
Tell me final thoughts that you've got as we wind this down, Chris. What takeaway message would you have for folks that you want them to leave with?
Maybe it's to kind of come full circle to where we started, and that open mind and imagination and curiosity. I think and kind of moving off of zero. I think it's great to try to if you don't have any exposure now, it's easy to get started with something like Bitcoin and the spot Bitcoin ETF is a great way to dip the toe, as they say. But crypto is more than just something you put on the shelf. It's meant to be used. And so if you're open-minded, I would suggest trying to actually play around with it a little bit, like send a stable coin or if you do have a little bit of Bitcoin, borrow against it, and what's amazing is you can kind of just do this permissionlessly. It truly is kind of amazing once you start playing around with it. So I would encourage, and if that's too much, you can read and do it, explore more passively. But I think your eyes really get opened when the aha moment happens when you actually try to use it.
Well, this has been a fabulous conversation, really informative. Thanks so much for being here with us, Chris. That you've been hearing from Chris Jensen, the VP Director of Digital Assets Research at Franklin Templeton. We've got the link in the chat so you can reach out to Franklin Templeton and learn a lot more about the investments that they offer and give you a really clear way to add a crypto allocation to client portfolios. We've got some other events coming up, including tomorrow. What you want to know about stable coins. This is without a doubt one of the hottest topics in the marketplace. So that's tomorrow at 1 o'clock Eastern. Next week on October 14, adding alternatives to create true diversification. And then on October 23rd, beyond Bitcoin, the case for indexing in crypto. Lots more webinars coming up. You can register for all these on the QR codes or just go to DACFP.com. Chris had mentioned earlier my white paper that I released in June on the fact that I'm now recommending a minimum of 10% allocations to crypto, up to 40% for aggressive portfolios. That white paper on why your crypto allocation needs to reflect a real difference than what we used to say. And a paper I wrote in January, the 6 myths that are preventing you from buying Bitcoin. You let a client read this, you'll persuade them that they ought to allocate. And we invite you to get your CBTA designation, become certified in blockchain and digital assets, up to 18 CE credits, an online self-study course with a world-class faculty. If you haven't yet read my #1 Amazon bestseller, The Truth About Crypto, named one of the best business books of the year by the Society for Business Journalists, I encourage you to do that. And you're the first to hear this. I have a brand new book coming out on December 4th, unrelated to crypto, about college, the truth about college. College is a wonderful thing and the direction for most high school seniors. However, 24% of freshmen drop out and less than 60% graduate in 6 years. College can set your child on the path to success, or it can ruin their life. And the truth about college helps you figure out the correct direction. Should that teen go to college? And if so, what college and what major? And it's a wonderful book that you're going to really enjoy, be terrifically helpful for your clients. And I encourage you to pre-order it at your favorite bookseller, The Truth About College. Chris, thanks again for joining us on the program here today. Really appreciate it. Wonderful info as always. Look forward to having you back again soon.
Thanks. My pleasure, Rick.
Thanks everybody for joining us. We'll see you again soon. Join me tomorrow.